Hello and welcome to another financial analysis video. Today I'm talking about Mattel and whether or not Mattel's dividend is sustainable. And what I just find interesting about this stock is it's not a telecom and it's not an energy company. It is a toy company, and so the macro issues of energy and the notoriously high dividend issues that are in the telecom industry are irrelevant here. We're talking about a toy company, and I think it's just great to have something like this in the S&P 500. Right now, their dividend yield is 6.8%, but believe it or not, it was over 7% at one point, thanks to the recent correction in the markets. And Mattel has increased its dividend, and you know, a lot of companies do this. They increase it every 4 quarters. But what's interesting here is that Mattel has not changed its dividend now for 7 quarters, and so you know, that's something to keep an eye on, and really we just hope that it's sustainable from the level of 38 cents, not whether or not it's going to grow. So let's take a look first at my first method for testing, and that is the free cash flow. And as you can see, Mattel has been hurt by recent declines in trailing 12-month revenue, now under $6 billion on a trailing 12-month basis. By the way, if you want to try to do it on a quarterly basis, that's how seasonal Mattel's business is. So trailing 12-month is perfect. And free cash flow is down right now. Operating cash flows dipped a little. Capital expenditures are up. So therefore, because of these two, free cash flow on a trailing 12-month basis down. It's at $600 million. Let's have a look at our last 4 quarters, and you can see we're looking at $515 million in dividend payouts. So guess what? Mattel is able, from the free cash flow test, to pay out its dividends. So that's good. But let's keep looking. Because of the really high swings in earnings, the payout ratios are just all over the place. They're just all over the place. So what I'm going to do is I'm actually going to come down here and do an amateur calculation. We know that the 4-quarter dividend is $1.52, okay? If we add up the last 4 quarters of earnings, we get $1.43. So $1.43 divided by that's the wrong way. $1.52, it's earnings divided by, dividend divided by earnings equals your payout ratio. And as you could see, the payout right now is 106% of earnings. That's a little hot, and that is a little concerning. And what I want to do to give us a little perspective of where that's been is I want to look at these 4 quarters up here when we had $1.24. And in that $1.24, 4 quarters, oh, that's not fair because we have, no, that is fair. That's a perfect spot, actually. So we had $2.45 in those 4 quarters. So it really has changed. $1.24 to $2.45, 50%. So the payout ratio has doubled. So guess what? There is definitely an increasing risk here, not just from the free cash flow side, but from the payout side of Mattel not being able to make its dividend. A huge 3rd quarter earnings is coming up, and it's coming up in the next couple of weeks. And that will give us an indication as to where this is going to go, because it's their biggest quarter historically. Well, at least in the last 4 quarters. Q3 is their biggest one. It's rolling off. So that's going to be really critical to that determination. Finally, I want to take a look at the price-to-book ratio, which right now is around 3. I think for all intents and purposes, let's just call it 3. And in order to get a good estimate here, 3 times. So we take the price-to-book ratio and multiply it by the dividend yield. That tells us the return on equity that we need, and it's 20%. And when we take a look at returns, we see that they're declining. They were in that 20% threshold, but now they're at 18%. So, in summary here, Mattel can continue to pay this dividend if they want. I think a little bit of it's going to come out of more than just earnings for the time being, but they've got the cash flow to do it. We need to pay very close attention to the third quarter earnings in the next couple of weeks. And I'm going to tell you right now, I am going to update my model on this when those earnings come out, and I'll share that information with you then. I hope you enjoyed this video. Happy investing.